Hey guys, welcome to DevTech Finance, and in this video we would be learning the term called SLR. So let's start. Statutory Liquidity Ratio. So SLR stands for Statutory Liquidity Ratio. It refers to the proportion of deposit the commercial banks are required to maintain with them in form of liquid assets. So this is the all the scheduled commercial banks, they need to maintain a proportion of their deposits in form of liquid assets. Now these liquid assets could be all those assets which are readily convertible into cash. That could be government bonds, government securities, cash itself, gold, or any money market instruments like T-bills and commercial deposits and certificate of deposits, etc. So all those liquid assets that need to be maintained in certain proportion of their deposits which commercial banks are having, and this is referred as SLR or statutory liquidity ratio. Now this SLR is determined by central bank, that is the Reserve Bank of India, to control bank credit, ensure solvency and compel bank to invest in government securities. So central bank tries to adhere with three objectives at the same time. First is controlling the bank credit. So if a bank has to maintain certain proportion, there is a control over the amount that bank could lend to the customers. So that's how the RBI tends to keep a control over the bank. Ensure solvency. Now if bank is having liquid assets with itself maintained as reserve, it won't get insolvent. So it is always having to pay to the customers the appropriate liquid assets or convertible cash amount with it. Then it also in a way compelled to invest in government securities. So government float its own securities which the government used to raise finance, and thus bank purchasing these securities help government also in a way by providing them finance. And the current SLR rate is 19%. In case bank defaults in maintaining this percent, they are charged penalty at rate of 3 to 5%. So as I said, it is mandated by RBI through government. So the commercial banks has to maintain whatever is the current going rate of SLR. So as on today, the SLR rate is 19%. So it means if the total deposit is 100% which the bank is getting through its customer in form of saving and fixed deposit amounts, then SLR would have to be maintained 19%. That is if that is 19% of 100. In case if the bank defaults and does not maintain this amount, they would be charged a penalty, and this penalty could range between 3 to 5% depending on the tenure of default. So this is what SLR means. Thank you for watching. I hope you understand the meaning. Do like and share my videos. Subscribe to my channel DevTech Finance. Thank you all.